All right, y'all, let's talk about trading psychology. Now, a lot of people out there will say trading psychology is the most important thing that you need to have if you want to become a profitable trader. And I'm here to tell you that that is simply not true. Yes, psychology is very important, but instead of trying to work on your psychology, I take a different approach where we want to work on our overall trading, and the psychology will just fall into place. Let me show you what I mean. I have a list here, how to develop trading psychology. And you will see that these things on the list really have nothing to do with psychology. What they have to do with is developing very clearly defined trading habits that will set you up for success. And over time, what's going to happen, because you have developed a system of trading that keeps losses to a minimum and profits to a maximum, the psychology will fall into place because you will trust your technical analysis, you will trust your plan, you will trust your strategy, you will trust your risk management, and you will ensure that you are taking profits and becoming profitable. And so the psychology will fall into place. People struggle with psychology when they're gambling. When somebody is gambling, that is where they start to freak themselves out. If they go long and then they see a giant purple candle coming down, they're like, oh no, I better go short. And then they go short and they see a giant blue candle, they're like, oh no, I better go long. Okay, they're freaking themselves out because they have no strategy, they have no plan, they're not using risk management, and they're not taking profits. If you can get these things down, I guarantee that you will be able to be in a trade and not obsess over it, not second guess yourself, and execute like a robot. So let's go through step by step. My favorite thing to say, step by step. Let's go through step by step. Carl from the Moon and Jason Casper, shout out to Carl from the Moon. Let's go through step by step how to develop this trading psychology. So the first thing, guys, is you need to have a very clearly defined strategy that you are using to trade. And the way you're going to develop this strategy is you are going to backtest. You're going to come up with a list of confirmations that you need before you enter the trade. And you're going to have certain rules that you follow for trading. If you can get these three things down, you will be better off than, I would say, 90% of traders who are approaching these markets, because a lot of traders don't have any clear-cut strategy or roadmap when they're looking to enter a trade. They might switch from strategy to strategy without even getting the first strategy down. I guarantee if you work on something and you backtest something and you have a list of things you're looking for before you enter a trade and you have personal rules that you follow, you're going to be more successful than most traders out there, okay? So what do I mean by that? What do I mean by having a strategy? Well, one of the strategies that I really like to use in, especially when trading crypto, right? When trading crypto, Bitcoin and Ethereum. I do most of my trading on Bybit. By the way, guys, if you need another account on Bybit or you're not on Bybit yet, it's a great leverage trading platform. You can trade so many different pairs on there now. You can click the link in the description of the video and get a whole bunch of rewards and all that for signing up. But if I'm trading, one of my favorite strategies is the divergence strategy, right? The divergence strategy, where I'm using Market Cipher, and I am using, let's see here, I'm using Market Cipher, and I'm just using levels of support and resistance in general. And let me see here. I had this fib level pulled. Yeah, okay. Right. So this was a great Ethereum short. And this is a strategy that I use where I wait for price to come to a level of resistance or support if I'm longing or shorting, and I look for something called a divergence, where price is printing higher highs, momentum is printing lower highs, money flow on Market Cipher coming down. Okay. The VWAP over time also printing, as we can see from way back here, even lower highs. And that's how you know we're going to come down. This is a strategy that I have put into place, and if I'm trading this strategy, I will not enter a trade unless all the conditions are met, right? All my confirmations are met. What are my confirmations? Number one, we need to be at a resistance. Number two, Market Cipher B on the higher time frames needs to be showing a top. Number three, there needs to be clear divergences on preferably the higher and lower time frames, and those are the confirmations I use to enter the trade. It's very clear, it's very precise. If the conditions are not met, I do not enter a trade. Now, I've back tested this method, and we can see that, over time, if we go and back test this method, like right here, for example, this was another short that we took, and again, this was an Ethereum short that I posted in the Discord. I forget exactly when that was, but we can see here, even if we take the fib from the high to the low, that again, what happened? The same exact thing right here, where we came up into a resistance, we printed bearish divergence on Market Cipher, boom, we come down. So you can back test this, and you can know, okay, when this happens, I would say probably like 95% of the time we're going to get a very good short out of that. And so I've back tested this. I have my strategy. I'm not entering a trade unless I get my confirmations. And then I have personal rules. What are my personal rules? My personal rules are, I'm not going to enter a trade if I haven't had the time to do my technical analysis, right? If I'm like at the grocery store pushing my daughter around in a shopping cart, I'm not going to enter a trade because I know I can't really sit down and look at the charts and do my analysis correctly, right? If I have already done my TA for the day and I'm waiting for something specific to play out, then I will enter a trade from the grocery store. But if I'm just at the store, I happen to pull out TradingView on my cell phone and I think I see something, I'm not going to enter a trade unless I've actually taken the time to go and do my TA. So that's my strategy that I have in place, guys. I've back tested it. I have specific confirmations I'm waiting for. I have specific rules for how I conduct myself while I'm trading. And if you have this first thing down, you're going to be better off than most traders who are just looking at the markets. They're like, I think we're going up. I think we're going down. They don't really know. They really just don't know. Now, the second thing for getting your trading psychology down is having a clear plan, okay? A clear plan. You need to have a very clear entry plan. You need to have a very clear exit plan for your trade, okay? A great example would be a trade that I took. Well, okay, so I'm in two trades right now. I'm in a long and a short right now for Bitcoin. Okay, I'm in a long from down in here. Okay, and I'm in a short from right up here. Okay, both of these trades have very clear plans in place. Okay, they both have very clear plans in place. For the long, my plan was I was going to enter as soon as we came down below the weekly and back up. Okay, down below the weekly and back up. So what happened was, literally, I'm following my plan. My stop loss starts out below that last swing low. I have take profit levels along the way up, okay? So I actually did take some profit out of the trade right up in here, okay? Somewhere in this area, I limited out some profit right here, okay? And then what I did was I moved the stop loss to my entry. So now this trade is locked in right here. You can see that I almost got stopped out. Okay, I'm still in the trade though, and I am waiting to either, if I see that we start rejecting off of here, which I think we very well may, then I'll either close the trade up here or move my stop loss. All right, y'all. So we got cut off there, but basically what I was saying is no, that's not what I'm trying to say. You really need to have an exit and entry plan for every trade. Where is the trade invalidated, right? If you know that the trade is invalidated if we lose this low, okay? Or you know the trade is invalidated if we start printing lower lows, right? Now if we come down and start printing lower lows, I know, okay, it's time to get out of the trade. I have a very clear plan. I know where to enter. I know where to exit. Most people do not know those things, and they get wrecked. The third thing, very important, it's related to your strategy and your plan. It's risk management, guys. Only risking 1 to 5% of your trading portfolio per trade is vital, absolutely vital to making consistent profits, okay? What I mean by that is this. You need to have your setups in a way so that if you're entering long, let's say you're entering long right here, okay? My stop loss right now was 0.75%, okay? Less than 1%. What that means is if I'm going to use leverage, right, I can use maybe up to 5 or 6x leverage while still maintaining this 1 to 5% risk per trade. All right, if I have an entry that's a little bit tighter, a little bit better, let's say I caught the trend on the way down and I were to enter right here, okay, which I did not, just saying, yeah, this is just an example sake. If you have a really good entry where you can have a really tight stop loss below that low, and you can have like a 0.15% stop loss, well, this means you can 6x leverage your whole account and still only be risking 1%. You could 12x leverage your whole account and only be risking 2%. This is so important because it ensures that your losses are going to be kept to a minimum. And remember, we have our strategy and plan already in place, which means we know if we're entering a trade and we happen to get a really good entry, we know there's a very high probability chance that the trade is going to play out in our favor because we have our confirmations. We've back tested the strategy. We're sticking to our rules. We have a very clear plan. So by only risking 1 to 5%, I like to keep it lower, right? As low as you can. If you're risking 1% per trade, then this means your losses are, your wins are going to far outweigh your losses. And here's what I mean by that, okay? Let's say that you only have $100 in a trading account, all right? A very small trading account, $100. If you had entered this long right here, you just grew your account by 1.75%. But remember, because we had such a good entry here, right? We can actually 6x leverage our account and only be risking 1%. So really we're trading with $600 and still maintaining very good risk management. So 600 times, what was the trade here? 1.75%. 600 times 0.0175 equals $10. We just made 10% on our account in one trade, right? 10% on our account in one trade. So now we have $110, right? So now let's say we have a very similar trade setup where we can 6x leverage our account again. Now we can 6x leverage our account. We have $660. And if we're making the same trade twice in a row, now instead of making $10, we're making $11.22. So now from our initial account, right, our initial $100 after 2 trades, we've grown the account by 22% in 2 trades. Okay, 22% in 2 trades. So now we have $122 in the account. Now let's say if we're keeping our risk management to 1%, what would happen if we lose now 5 trades in a row? Let's say we won 2. What if we lose 5 trades? What if we lose 6 trades? Okay, what's 1% of 122? $1.22. Okay, so we're only losing $1.22 when we were making $10, $11. And if we do this, let's say 6 times, right? So we had $120, $22 minus $1.22. Okay, now we're down to $1.20. What happens if we lose another 1%? Okay, $1.20, right? So, we have $120 minus another $1.20, $118. We're still 18% in profit after 2 losing trades. What happens if we lose another trade? $1.18, right? So 3 trades, we're still 16% in profit. Okay, and you guys get the idea. If we're keeping our risk management in check, one winning trade is going to offset multiple losing trades, right? So again, if we lose another 1%, that's minus another dollar. We lost 4 trades in a row, and we're still up 15%. Right? 5 trades in a row, and we're still up 14%. Um, 6 trades in a row, and I actually did that last math wrong. We'd be up more than this. But 12 to 13% after 2 wins and 6 losses. Net profit. This is why it's so important to have good risk management in place, guys. Because the wins will offset the losses, right? And so if you're risking more than that 1%, then you're going to definitely be losing money much faster. And having good risk management makes it easy to grow your account. Having bad risk management makes it easy to blow your account, okay? Because if we have that same $100, right, and let's say you're entering a trade where you're not using good risk management, and let's say that you enter long right here, and your stop loss goes below the last swing low, and now you have a 1.5% stop loss, right? Let's just round it up to 1.5% stop loss. And let's say now you're using 6x leverage, right? Well, what's 1.5 times 6? 1.5 times 6, if that trade gets stopped out, you're losing 9% of your whole account, right? 9% of your whole account from one trade. If you have $100, right, and you're losing 9%, well, now you only have $91. You have $91. And this now, in order to get your $100 back, if you make, 9% on your $91, right? So you lost 9%, now you gain 9% back. You're not making back your full $9. You're only making back $8.19. And so your losses are going to offset your wins now, because it becomes an uphill battle to make that money back. If you lose 9%, you have to gain back more than 9% just to break even. So it's very important that you have your risk management in place here. And the thing is, guys, when it comes to the risk management, if you have this strategy in place where you know how much you're risking for every trade, you have the strategy, you have the plan, you have the risk management, you are not going to be concerned. This is why it has to do with psychology. You are not going to be concerned about your trade if you're following these procedures, because the outcome of doing these things, the outcome, as much as they're hard to do and they take work and they take discipline, the outcome of doing these things is you are going to be profitable over time. And then the fourth part of trading psychology, which for me is very important, is take profit while you're in profit, because ain't no one ever went broke taking profits, y'all. No one ever went broke taking profits, okay? And for me, like I was saying, I'm in a long position from down here, okay? And, in the Discord, this is true, right? We're rejecting from here. I agree. This is a good time to short here. And so in the Discord here, I was talking about this long for a long time, right? I was planning out this long trade since Sunday, okay? And it's currently Thursday, where I wanted price to drop down right into this level and get a bounce from there, okay? So I had my strategy in place, I had my plan in place, clear entry exit plan. Even before the trade even happened, I had this plan worked out. I had the strategy, what I was going to look for, the divergences and all that. So this morning, what happens, I look at the chart, we have a bullish divergence on the 1 hour, the 12-minute is getting massive bearish, bullish divergence, money flow diverging upward. Okay, so now what did I do? I entered my trade here. I entered the long position, and what I did was, when I was in profit, I took out part of the position. I took out part of the position because, the trade, it ended up getting in a decent amount of profit. In fact, right here, 31% in profit. So it's like, while I'm in profit, let me take out part of the position. And now what I can do is I can move my stop loss into either break entry or profit. So if I longed here when we reclaimed the weekly and I moved up here or whatever, this is not exactly what I did. This is just the rough estimate, right? Now that I'm in profit, I can take out 50% of the trade, make sure I'm going to exit the trade with more money than I started, and now my stop loss is at break even or even a little in profit, okay? Or even a little in profit. And what this does now is I can relax. I don't care if price dumps. If price pumps, great, I make more money. If price dumps and I get stopped out, great, I made money. I made money on my trade. I have more money in my account than when I started, right? And people were hating on me for this long, and I don't blame them, right? It's a risky long. Bitcoin's dumping. But I had my plan. I had my strategy. I stuck to it. I have an exit and enter strategy. I'm locking in my profit. I'm using good risk management. And so my psychology is so chill right now, where I can sit here and make a video and watch price do whatever it's going to do and not even care about it because I know I'm making money. So if you do all four of these things, it will put you in a position where, like, the psychology becomes so easy. You have a very clear methodology that you're sticking to. You know your wins are going to outweigh your losses. You know that you're, as much as you can, eliminating losses altogether by taking profit. And so it's like, one of two things is going to happen right now. Either I'm going to get stopped out of this trade having won the trade, or the price is going to pump from here against everyone's intuition, and we're going to hit a new all-time high. Bitcoin's going to go to $5 million per Bitcoin, and I'm going to be so rich, I'm going to quit this dang YouTube job. Just kidding. I like YouTube. I love YouTube, and I like making videos and content. But see how doing these things takes all the pressure off the trading? It takes all the pressure off. There's no pressure. I don't have to constantly look at the chart and be like, oh no, is Bitcoin going to pump? Is Bitcoin going to dump? How's my trade doing? Am I in the negative? I'm not going to be in the negative. And if I was going to be in the negative, I had a very clear stop loss where I was only risking a small percent, which another win would very easily make back that loss, and plus a whole bunch more. So if you can do these things, there's no, I don't want to say there's no psychology involved, because when it comes to planning out your trades and executing your plan, sometimes the psychology is involved. But if you have the strategy, you've back tested, you know what you're looking for, you trust your TA, you have a plan, you're using good risk management, it takes a lot of the pressure off. And then you can just relax and enjoy, guys. Relax and enjoy. Go into the Discord, right? Relax and enjoy. You could be like J4 Nor, who's making 322%, right? And all these people who are in the Discord make money. By the way, guys, if you want to join the VIP Discord, where I do post potential trade setups, longs and shorts, and I do daily TA updates where I give levels I'm looking for and stuff, check out patreon.com/Jason Casper. Also, guys, if you want to learn technical analysis and all this stuff, check out JasonCasperTrading.com. This course will give you the knowledge and the skills you need to become a confident, profitable trader, and we walk you through how to do all these things in the course, how to create a strategy, how to backtest it, how to get your confirmations, how to have a plan, how to do risk management. We even give you strategies right out of the box you can use to be profitable with right away. Check it out, guys. Appreciate it. If you like this video, make sure to like the video. Make sure to subscribe to the channel. Make sure to share the video across all your social media networks. May God bless you, and I'll see you in the next video. Peace.